Welcome, everyone. Marc Jimenez, Wealth Advisor and Chief Investment Officer for CAM Investor Solutions. Thanks for watching this short session. Today, we have our good friend, Nancy Davis with Quadratic Capital. Nancy is the founder and the Chief Investment Officer for the firm, and also the portfolio manager for the Quadratic Interest Rate Volatility and Inflation Protective Fund, also known as IVOL. Welcome, Nancy.
It's great to be here with you, Mark. I'm really excited to have this conversation with you.
Thank you.
A year later, right?
It is a year later. And I think the last time we did one of these sessions, it was back in July. It was a longer session where we were smack dab in the middle of the pandemic and economy, election coming, all sorts of things that were happening. But before I jump into some questions I had for you today from our audience that I think they'll enjoy hearing your thoughts on, I wanted to take a step back to a year ago, because that's the last time, literally this week, that I saw you in person and joined your team to ring the closing bell on the New York Stock Exchange, if you recall that.
I know. Let me bring up one of the photos from that crazy day. It's like, that was literally about a year ago. Hold on one second. May I share my screen?
Sure, go ahead.
Okay. This screen share. And yeah, here's a picture of from that day. There you are.
Yeah.
Here, let's see if I can move this to see what the date was. It was March 12th. So yeah, 2 days, it'll be exactly a year. I think that was the biggest sell-off in the equity market that day since 1987, I believe. So
that's right. And I think, for our audience, because I was there, and from my vantage point, it was exciting to be there, but the entire week was interesting as the world was changing very quickly. But kind of for our audience, share what was happening, not just, I think, on the exchange that day, but in capital markets from your perspective, because I think it has a lot to tell as we fast forward in today's market.
Yeah, I mean, it was definitely a panicked time. I think a lot of investors were very, unclear about what the policy responses were, unclear about what was happening. And it seemed like it was just a sell everything, plus oil was falling at the same time. So it was just complete carnage. I mean, it was a crazy day, crazy month, crazy period. I'm very proud of IVOL to have, over the course of March, even though the tips that we own were down, the fund had positive performance. So it was great to see the strategy shine in that crazy environment. But yeah, I can't believe that was less than a year ago. It seems like ancient history, right?
Well, it was. I mean, and it was not just maybe that day. I mean, I remember things about the computers, we call it, got overloaded that day on the floor, I recall. And the head of the NYSE was telling us that there's a little pivot corner that no one sees on television that had to step in and kind of take over a little bit to help the computers out with the electronic trading, which hadn't happened in a long, long time. So there's things like that. You saw everything sound.
I didn't even hear that. I didn't even know that was happening. I thought they were like, oh, everything's been, going to some other site and it's all, all been working fine, but we've been working, in some like disaster recovery facility, because the floor was pretty barren looking out. There weren't a lot of people, right? Besides us and a couple little heads on the floor.
Right. They had started the process, I think, of as we heard when we left that day, they were going to close to the public starting the next day. And I think it stayed that way for the indefinite future through the pandemic. But I know back then you saw rates start to move around, interest rates start to move around. And fast forward to today, the pandemic, it's been a year. We've seen the economy, we've had an election, unemployment. I mean, crazy GameStop things happening in the market. You name it, it hasn't been short of events. Interest rates, that's your expertise. You're an expert in the rates market. Until recently, rates were at generational lows. They're still very, very low, as we know, but they started to tick up a little bit recently. In your opinion, Nancy, what's changed?
Well, a couple things have changed. I think, we've had a blue wave come through. We are having a huge, another round of fiscal spending. We have the average inflation targeting now, where the Fed, is not going to have a symmetric mandate on inflation. And then at the same time, we have them not even thinking about raising rates. But I think the one kind of weird thing since the middle of February is that the rates market has actually started to price in hikes now. When you look out in the forward markets, you can see out in 2022, a little over a full hike is priced in 22. And then if you go out to 2023, you actually have almost 4 hikes that are being priced in. So it's kind of a really interesting time because the forward guidance has been working, but now the rates market is not listening to that forward guidance and pricing in these hikes.
And that's interesting because we've seen in the last couple of months, and last month especially, markets get pretty choppy in all asset classes, not just the risky assets, but even safe assets like treasury bonds. My audience, clients, they hear me beat this to death about being careful about rising rates, and if it ever happens, owning the right assets, owning the assets that you get paid to take risk on. And so, given what's happened recently, for our audience, maybe just share what are your thoughts on why the market is so concerned with the idea of rising interest rates?
Well, I think it's which interest rate is rising, right? Higher 10-year yields is actually probably a pretty healthy sign for equities because, if you think about the 10-year, it's really considered by many in, like the CAPN model as a risk-free rate. So when the 10-year is super bid, meaning yields going really down quickly, like they were that day that we, a year ago in March when people were panicking, that's usually because the rates market is saying, things are going to get really, really bad. It's the flight to, perception of safety, right? I don't personally don't think treasuries are risk-free, but the perception of safety. And so higher long dated yields is actually a more risk-seeking environment. Generally, it means that people, are able to feel like they can take risk, whereas lower front-dated yields is typically a more, people are concerned about the Fed might have to cut rates or we're going to be in a risk-off environment. So it's a pretty, interesting dynamic because a lot has changed in the level of rates since just a year ago. And obviously a lot has changed in fundamentals as well.
Right. And I think, with some of those areas, there's different viewpoints, right? Just in the last few weeks, whether it's growth stocks, value stocks, treasuries, tips, real estate. I mean, everyone's talking about their own views and opinions, which is interesting. And I think that's maybe why people are trying to figure out kind of where to be positioned going forward. If you look at those longer rates, you mentioned just the 10-year, to kind of look at some of my notes here. In past discussions, we've talked about this, but if the 10-year or even some of these other rates you've mentioned that exist continue to rise, what are some of the things that investors should really be aware of? What should they be thinking about when it comes to investing and planning for the future?
I mean, I think people have to be scratching their heads at least, in nominal treasuries. We've had a little bit of a move higher in rates and they've lost a lot in price. So yeah, if you sit and hold them till maturity, you'll get back your principal. But I think it has been a little bit of a wake up call especially for 60-40 portfolios where you've had this stock bond correlation not always holding. So I think generally investors are looking at ways of diversifying themselves and figuring out, is a plain old 60-40 the right mix going forward, or is it important to be thinking about other things?
Right. And we do a lot of planning for clients, not just for retirement, but other goals they have. And a lot of that has assumptions that apply to that, right? Whether it's the 10-year, looking forward to interest rates, expected return. And you're right. With a 60-40 portfolio or something else, that's a huge, or can have a huge impact. Is there anything else, again, given not just looking back a year from that interesting time, that we saw, but even right now, is there anything that you see with your audience that you see that is probably pretty unique or something that we want to keep an eye on going forward?
I do think more people are talking about inflation. I think that's one thing that has changed quite a bit. A year ago, nobody was really thinking about inflation or risk to those portfolios. So I think now investors are really trying to think about, like, what do I do if the Fed is successful in achieving this mandate? Because we have this, it's almost like a perfect alchemy now, or perfect cocktail of, fiscal spending here and monetary policy being loose here. So it's just, I think it's just a more topical, is it reflation? Is it inflation? Is it stagflation? Are we, just going to have deflation again? I think it's just something that most people are now thinking about, which a year ago, nobody was really concerned about that.
Right. No, and that's interesting that, depending on who you are and what you do, you may be seeing inflation pop up already in your area, or what you need to live day to day. So it's an interesting topic. I think it's something that everyone's watching and talking about. So thanks for highlighting that. And thanks again for taking the time today to kind of go through some of these ideas.
Mhm.
Obviously, it's been an interesting year. Looking forward to moving forward, and I'm sure you are too. And thanks again for your time, Nancy. And thanks again for everyone watching this. And Nancy, I look forward to seeing you again soon, and in person, of course,
Yes,
in
I
New
know.
York or somewhere else sooner than later. Thanks again, and take care.
Thanks, Mark. Great to catch up. Have a great day.
All right, bye bye.
Bye.